Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today we have a video about falling silver supply, as well as the latest alleged additions into SLV and the Silver Trust. A lot happening, some other exciting news stories that will be fun to dig into. So with that said, let's get started. And here our first story of the night. Hopefully some of you guys already caught this afternoon or this morning. Great article from Jeff Clark, senior analyst at goldsilver.com, saying new silver supply is drying up faster than Death Valley. So as he mentions, annual data for silver supply is in, and it shows that the structural decline in new supply the silver market is strengthened. Main issue, deterioration mine production, although scrap falling as well. And interesting here, he notes this is important because much of the bullion you and I buy comes from newly mined silver. Secondary sales will always have a place, but mine production will need to be healthy and rising. So here under silver mine production, and you can see changes in annual silver mine supply as negative as it's ever been. Some red bars showing the decline. I mean, God only knows what it's going to look like for this year, where a lot of these silver mines have been shut down. In fact, Jeff had another great article and a reason why. If anyone wants to study this sector, I'd highly recommend subscribing to Jeff's column there. He talked about how 30 to 50% of silver supply had been shut down at the peak of COVID. So it's not a small amount. Certainly a lot of that has come back online, but either case, this is the past 4 years. We've never seen a 4-year drop this severe. It's largely a result of declining grades, lack of new discoveries, and very few new mines coming online, which we've talked about on the show here before because, especially if you go to the conferences and hear a lot of the mining executives speak, Keith Neumeyer's talked about this. I mean, there's not going to be incentive to turn a lot of these projects back on at the current prices. Certainly, if you have a mine where, you can get silver, but it costs about $20 an ounce, you're not going to do that right now. There we see annual additions to silver mine capacity from developing projects. In fact, only one new primary silver mine came online last year. Keep in mind, a lot of the silver comes as a byproduct. And he mentions up here, byproduct producers are spending less and less on exploration development of projects. I believe it's about 70% comes as a byproduct. Or no, Jeff says that's up to 80% there. So, but they won't produce more, won't they produce more silver if the price rises? Not really, because silver is not their primary source of revenue. So in some sense, when you have, let's say, industry demand is down, but the supply is also going to be down, especially if you have a lot of these are a byproduct of copper, zinc, and lead mines. So anyway, just because the silver price rises doesn't necessarily mean you are going to get more silver. So, again, here's secondary silver supply and bullion inventories have declined. Global silver bullion inventories. This is interesting. The data is coming from CPM Group. So again, I think there's some degree of guesswork to any of the data, but still you can see he had the global inventories down to 1.1 billion ounces. I know the SLV, which, well, let's take a look right now. They say they have 1,300. So I find this number usually about 2 to 3 billion if he's talking about global silver bullion inventories, but there's not a lot. This has exchanges, dealers, ETFs, and government inventories. So that amounts to 1 year's supply. There's not, the point being whether it's 1 billion or 2 billion, depending on how you define it. The Silver Institute numbers showed a deficit the last couple of years. And now we've had this spike in demand, which, aside from what is happening on retail, I mean, you can see just here in the last, if you go back to last June, so basically in the last year, you have almost 300 million ounces going into the trust. And now that's happening when the supply is down. Uh, so we'll see how that goes. And he says, I'm sure most silver investors did. What is the answer to this? Higher prices, but sustainably higher prices, because companies aren't going to turn on these mines. You know, if it goes up to 21 bucks and then comes down to 18. So Jeff has a great point there about the sustainability of the price as well. So we will see what happens there. It's watching these underlying forces grow and seeing the price go in the opposite direction than you would expect will make it fascinating to see once that is resolved at some point. Quick look at the weekly holdings. Here you see 7 million ounces added. So down from the last couple weeks, but still a significant amount. There is gold, another 2 million ounces added last week. Quick look at the price. You see since the open last night, silver about flat, but given what I pay attention to, and I think a lot of folks who've been looking at this for a while, open 1760, there it's up to 1790, down to 70, above 18. Not surprisingly, hammered at 18. Obviously, there's a lot of stop orders, high frequency algorithms at these round numbers. In fact, this is almost exactly what I asked Bart Chilton about, where once you get to that round number, do you often see spoofs there, because there's a lot of trading action that gets triggered and you can see a big drop. And he said that's exactly what happens, except that now in today's markets, because of the way they're set up, it happens at a much more severe pace. And is interesting because then you look at the gold price, and you know, I would call the 1750 line similar to the $18 mark, which made it interesting to see that it burst through a couple of times, which certainly there are technical analysts that, you know, can analyze that at a high far level. Although, just to me, the idea that you're seeing a lot more volatility, whatever you want to take out of these, and again, as we'll cover in a couple of minutes, when you look at what happened the day the Fed announced the unlimited version of quantitative easing, 8 days, I believe, after the first round proved not to be enough, interesting to notice some of the market reaction, which we will get to. Although first, here we have, could the silver price really hit US $130 per ounce? You may notice I don't often put a price target on these things. I don't know anyone who really knows what the fair price would be without the COMEX leverage. I got into all this because I was invested in this back in 2011 when silver hit 50 bucks, and just seeing the way it got pummeled despite what was happening in the world with the US being downgraded, the debt ceiling debate, you know, being a catastrophe, and QE2 and everything else that was going on. So I've always looked at 50 as somewhat of a floor of what I think it would trade at were that leverage not in place and there was no such thing as the COMEX. I've heard numbers in the triple digits, and again, I'm a bit biased. I sit here releasing a book on silver, have a silver YouTube channel. I mean, we talk about gold a little bit too, But I mean, when I hear the triple digit numbers, I mean, it's like you get assaulted by one data point after another. I mean, we started the video how supply is going down, demand by any metric, whether it's retail, SLV. Will be interesting to see the COMEX deliveries next month. But I mean, there's just so many factors where it makes you wonder how high could it really go. So I wouldn't be surprised, certainly just to today's gold price, to really converge that ratio. You quickly get into some big numbers. And I think Keith Neumeyer, the CEO of First Majestic Silver, who is featured in this article, certainly as qualified as anyone on the planet to make such a statement. He's running the and I have a correction to make. I called First Majestic last week the purest primary silver producer, which I believe is, I guess you would say, is technically Impact Silver has a higher percentage. Obviously, First Majestic, a bigger company. So did want to make that correction and distinction, but Keith, one of the largest silver companies out there, and sees the entire chain, as well as he talked in the big silver short book about how he finds that when he talks to any of these companies about their how much silver they're really requiring, that usually they don't want to say anything about it. So I think Keith is quite qualified to say that. He also has a trading background, which I think factors in because he understands the market component better than, not that others don't, but just that's a helpful background to have. And he's been calling for triple digit silver for years, is more enthused than ever. And this was interesting. In silver in the future, what factors affect its movements? I mean, sometimes people, we talk about the manipulation a lot, not because I want to be talking about that, but because I think that, the paper, fractional reserve paper trading is what actually determines this COMEX price. But it's like, what should determine the price? Well, they say the strength of the US dollar, which the Federal Reserve is currently hyperinflating. US Federal Reserve interest rate changes, which last week Jerome Powell said now we have at least 2 more years of 0% interest rates. He said he's not even thinking about raising interest rates, which was quite incredible. Quantitative easing by the central bank. Well, they started with QE, then went to unlimited QE, and have hinted at more aggressive measures, as well as geopolitical issues. I mean, you see China, Russia, and most of the globe making arrangements to walk away from the dollar system. And then lastly, elements of supply and demand, which we covered: supply down, demand up. So, I mean, what are you supposed to think? I mean, that's paints a pretty clear picture. So again, especially I understand certainly the challenges with putting a timing on things, and also I understand people are watching and investing, so I don't want to be going overboard, but the idea that we could see $130 plus silver, especially, I mean, at some point you'll see numbers where it's worthless and we have confetti money. But anyway, silver price 17 or 18 bucks seems pretty low to me. One of the reasons why the price gets so low, another great article by Craig Hemke of Sprott Money: Bank EFP Abuse Falls Sharply. It's interesting, certainly for anyone who tracks the exchange for physical market. Where do we go down here? So they've kept, him and Eric keep track of this for every single day. That's right. In just 2 calendar days, 4 million plus contracts were swapped off the COMEX, which is 13,820 metric tons. I believe the U.S. government just has 8,000 alleged tons, which I don't think are likely there or not leased out in some form. Um, and I actually drove by Fort Knox a couple of years ago. It was there was nobody standing out there, and just kind of bizarre. It looked like an empty shed where no one's been for a while. Um, uh, EFP abuse actually, if it's possible, accelerated in the first 3 months of 2020. In the first 15 trading days of March alone, saw 290,000 contracts, which is 900 metric tons. So theoretically, an eighth of what is in Fort Knox in just a couple of days. And then once the Fed announced on March 23rd the unlimited QE, that was the day where the volatility picked up, where you had the market makers blown out, HSBC losing 200 million, CIBC reported 60 million, I believe it was. And we've had disruptions to the supply chain. So CME Group was quick to rush a new contract into existence to satisfy demand deliveries. So we'll see. And good article again on Sprott Money Bank EFP abuse falls. It will be interesting to see how long this goes on. And again, here I have pulled up the unlimited QE, which started March 23rd, which I've talked a lot about March 23rd and March 24th, because here's the gold price. Although somehow it didn't clue into me that it was the unlimited QE announcement that happened. So here you have March 22nd was the Sunday, gold right at 1500. Just, I love these charts. No volatility, just flat as a board. And then you have unlimited QE, and you see, and this is what is really fascinating. I can only hope and pray that, all right, whether the Department of Justice ever puts a stop to this or not, we'll see. But I would love to get commentary from a regulator at some point, when it's no longer a matter of national security, what their take is on that action there. But that's the day that these banks are announcing losses. Um, Speaking of other dates in history, here is another day I think back to a lot. This was the Friday the 13th, interestingly enough, after the Fed injected $1.5 trillion. And I just thought, I remember thinking it back then, and I'm not really, it hasn't exited my mind since then, where this is just conjecture on my part, but I think something bigger broke that day. Maybe I'll start asking a few folks, but because the Fed accelerated previously announced purchases of Treasury securities on Friday. So it was just a day later, Fed announced Friday morning that it would purchase later in the day roughly half of some 80 billion in treasuries that it had said Thursday would be purchased over the next month. And it's interesting because my partner here at Arcadia, her brother is an advanced financial professional. And he had some similar feeling where to him that morning it was like something's going on here. And so just something I've been thinking about that I'll research more into, although I know we have such a great audience that anybody has any other thoughts on that, leave it in the comments below. And lastly, to wrap up tonight, we had our weekly meetup group this morning, Coffee and Metals here in Denver. Something for anyone who's caught the option calls I've done, which we have more of. I'm hoping for next Wednesday for the next one. We will see. But I found myself backing out probabilities where if you do expect a big move in the silver price, I like looking at First Majestic. We'll be studying a few other ones, but just people have been intrigued by what some simple option math can do. And we're going to walk through that in a future video. But what a great reason to hit that subscribe button, as well as the notification bell, so that you can be announced or notified as soon as that is available. I think now, for some, to be clear, for some people that is highly inappropriate. You do not want to do that. Get your physical silver and just leave it. So this is more of an advanced trading thing, although for you advanced speculators out there, it's some interesting math I found. So either case, we'll have that in a future video, hopefully within the next 2 weeks. Tomorrow, G. Edward Griffin, which I'm really excited about, and a lot of good things happening. Also would like to note, we just hit 16,000 subscribers today. So thank you to everyone out there. It's really nice getting your feedback, and I appreciate the folks who have been spreading the message. Always a great time to hit the share button as well, right down there. So hopefully we can just, well, I guess my real goal is just to help share whatever I can from my experience in finance, not claiming that I get everything right, but did go through this fascinating adventure and try to pass along whatever I can. So appreciate that so many of you are finding these videos helpful. And again, if you'd like to hear more about what's going on in the physical silver market, here is last week's call with precious metals dealer Andy Scheckman of Miles Franklin. It's ready for some water. Time for some water. Taking Ma out to Red Rocks tonight. This is her last day in town, so excuse my stumbles, as we've been a little feeling the time crunch today. But thanks for being here. And here comes the physical silver and gold market update.